Hey everyone, thanks for tuning in to another episode of On the Brink. So we've been having a lot of fun going deep into topics on this podcast, and this is going to be another one of those deep dives. So we're excited to have a close friend of the pod, Terrence Dempsey, the head of product at Fidelity Digital Assets, on the show this week. Terrence is definitely a below-the-radar type of guy, but anyone who's ever interacted with Fidelity or before that digital currency group where he used to work, over the years, you know that he's one of the most talented and hardworking people in this industry. And as our former colleague, we can certainly attest to that from firsthand experience. In this podcast, we spent a lot of time talking about how Terrence actually got into Bitcoin. And so he was working at Second Market for Barry Silbert before the company became Digital Currency Group and was really on the ground floor of that journey. We also spent time talking about Fidelity Digital Assets and the types of products and services that the firm is offering to their clients on the institutional side. Before he was the head of product at Fidelity's Digital Asset Group, he actually worked on the liquidity provisioning for this product line. So some really good content that I think will be new material for a lot of people. This one was a lot of fun for us, and I think you'll enjoy it too. So without much further ado, here is our conversation with Terrence Dempsey.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $2 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin. Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And we're very lucky to have Terrence Dempsey, head of product at Fidelity Digital Assets. Thanks for joining the pod.
Thank you for having me. Very excited to be here. Very fortunate to be here. You've had a lot of great guests.
First podcast for you.
First podcast, indeed.
So Terrence is a former colleague, and we're very excited to dive into a lot of content with you. So as we do with most guests, we'd love to just start with your career arc. So how did you become involved in the space? What was the road that led you to be the head of product at Fidelity Digital Assets?
Yeah, I mean, I wish I could say I had the foresight to say this was going to be the next biggest thing. For me, frankly, it was right place, right time. I was working at Second Market, actually right out of college, as an analyst there, focused on mainly their private company marketplace. And our CEO and founder of Second Market, Barry Silbert, most famously now runs Digital Currency Group, or DCG. Started getting excited about Bitcoin and started talking about it, and actually saw some of the friction in the market to be able to buy, sell, hold, store digital assets, and at the time, namely Bitcoin. So he was talking a lot about it and wanted to solve a way to do it. And I was just in the right seat at the right time and had the opportunity to help build out the Bitcoin Investment Trust and what's now Grayscale Investments. That ultimately led me to Fidelity here in Boston. So moved up to Boston in 2017 to take on a role within Fidelity Center for Applied Technology as they were looking at this space and operationalizing in general a number of businesses within there. And so the work that was getting on in Fidelity Center for Applied Technologies was really interesting to me, especially the work they were doing around Bitcoin and blockchain, and the focus that the team had on doing that was really interesting. So kind of packed up my bags and moved up to Boston from New York in February of 2017, and have been here ever since. And so joined much more on the operational side. We announced in October of 2018 the launch of Fidelity Digital Assets as a business looking to serve institutional customers, and I was fortunate enough to help oversee the product function there.
So that's an awesome story, and definitely want to dive into a lot of the Fidelity parts. But curious, you talk about being at Second Market when Bitcoin kind of burst on the scene. A lot of people know Digital Currency Group now. They have a venture arm, they have Genesis Trading, they have Grayscale Asset Management. But you were there before any of that was there. And so what was that like? I mean, did you even know what Bitcoin was? How was the initial origin of that story? How did that start?
Yeah, the introduction. So actually I started there in 2008. A day I'll never forget, September 15th, 2008, famously the day Lehman filed. So
wow.
Really interesting, full circle here. That the intro to your podcast now has got some of that story in there.
Yeah.
And I was kind of thrown right into a hot seat. And funny enough, I was an intern. So I joined as an intern. The market was kind of going away. I graduated college. I ended up going to Australia. I played lacrosse in Australia for the summer, came back, and was fortunate enough to get a role at a company at the time. It was called Restricted Stock Partners as an intern. And 6 weeks later, it was Halloween. They offered me a full-time role as an analyst doing data and analytics. And so that was
Bitcoin white paper came out as well
that day.
On that day.
Yeah. And I'll never forget, it was Halloween. We were actually moving offices. We were all the way downtown in Manhattan when they told me that I can join on a full-time basis. And that was super exciting to me. The company then changed name to Second Market. I started working on the private company side of things, so actually helping to facilitate transactions in private company stock. And kind of through some of that work, we had heard about more financial services, fintech companies that are coming about, and obviously Barry was very much part of that work. And he's the one that started talking about it. We'd have these all hands meetings.
He would just bring up Bitcoin? Or?
Yes, we'd have all hands meetings, and one of the things for every new employee, they would introduce themselves, but also talk about something they're passionate about, and Barry would always give the example. And he started talking about what he's passionate about outside of work, being Bitcoin. And I'm not gonna lie, dismissed it at first, and it took me reading the white paper a couple of times. It took me to fully actually start working on what the problems were. And, if we think market structure is bad now, you can only imagine what it was like back then in late 2012, early 2013, when we started thinking about how to productize that, and was just fortunate enough to be in a desk working in an operational role to be able to think about different structures there. And for me at the time, it was just an asset, right? It was a problem. There was a market structure issue. And it took me, and I'll never forget the day when someone had asked, I'm pretty sure it was Barry, which was, where do you fall on the scale? Are you an evangelist? Are you skeptic? Are you somewhere in the middle? And it was, I kind of said I'm a Bitcoin evangelist. It must have been sometime in early 2014. And I remember that because I think about it all the time, which was the day that I realized that this was actually a really cool, powerful asset.
Did you ever foresee that GBDC would grow to the size that it has?
No. I think it's remarkable. And I shouldn't say no, I shouldn't be so dismissive. I think at the time that we were doing it and the early days of that, when we launched in September 2013, for me, this was a fundraising mechanism. We had launched a number of funds as well, things to like hold Facebook stock. And that to me was like, at the time, very interesting. It's much more mature. And so,
pre-IPO, I guess.
Yeah, it was
right?
pre-IPO, correct. Yeah. But yeah, by the time, I left in 2017, it was pretty large. And then obviously you had the price run up in late 2017, where that's now ballooned, I think, something around $2 billion in assets. And so, at the time, did I think in 5 years or 4 years even that this would be the size it is? No. Did I think sometime at maturity it would have grown to be that large? Of course, right? That ultimately, you can look at GLD, and that's what we did a lot. We look at GLD as a comp, and that grew a significant asset size.
So you even at inception, you didn't necessarily just see the Bitcoin Investment Trust as a curiosity. You felt that it could be a virtual commodity and treat it as such.
Me personally, at inception, which was September 2013, it was a problem, right? It was, people wanted access to this investment. I didn't see it as a virtual commodity at the time, personally, right? I think a lot of people saw it that way, but it definitely took me a lot of time reading into the white paper to almost say, and by the way, when this launched, it wasn't my only role, right? This was a single vehicle that was being distributed and operated on by the folks at Second Market. And so, I still had other responsibilities. And ultimately that became a full-time role for me, which was kind of that turning point.
So anyone who's met you understands that you're really passionate about this space and that, you spend a ton of time. It is your hobby, just really digging into it, reading as much as you can, speaking to people in the industry. And you've been in the industry for a really long time. So curious what your particular affinity is. Are there parts of this industry, whether it be Bitcoin or other assets, that you really identify with, and how do you think about that?
Yeah, I think for me, it's the perfect asset to solve a lot of, curiosity perhaps, right, that I have. my whole career, I was the generalist, right? Whether it was, marketing, operations, distribution, market structure, even a little bit of sales, and then economics, accounting, legal, history, all things that I find very interesting. And getting to work in this space, you get access to all of those things, right? You're not in this vertical, just kind of stuck, pigeonholed about one idea. You're not just a technical person that's a developer or coder. You're not just an economist. You're not just a salesperson. You have to have a really good understanding of a wide variety and breadth of different topics to really, be able to piece everything together for what Bitcoin is. Bitcoin's not just a technology movement. It's not just an economic movement. It's not just a legal movement. And all of those things have been super interesting to me. And so, it's packaging all of that together, which is what I find to be the most interesting.
And so you've seen, obviously, since you started at Second Market, there's been a lot more than Bitcoin. In 2017, we had this blow off the top with all of these ICOs, which a lot of those are unregistered securities offerings, obviously, but I certainly didn't see that coming. I mean, that took me by surprise. Curious what your reaction was in 2017 when things just started getting crazy.
Yeah, and again, I was fortunate enough to be in a seat actually facilitating a lot of private company transactions, right? And so for me, it was really interesting in that here's a new way for companies to have a capital formation process, right? You are kind of taking out a lot of the intermediaries, or the intermediaries look a lot different than normal, and kind of tying it back to understanding some of the legal regulatory implications of what some of those token issuers have done, and that we're kind of just seeing the ramifications on. To me, what was most interesting about that was the potential tangential way for companies to raise capital outside of a traditional method. And to me, that's still very interesting, right? Being able to go direct to a consumer to be able to raise funds, as long as you do it, obviously, in a regulatory compliant way, is very interesting. A way that you can actually trade those funds and actually program those securities, to me, is very interesting. So, while it was mania, right, that everyone would kind of agree to, for me, from a pure market structure interest standpoint, was really interesting.
Do you think that, so you feel that there's merit in the notion of raising capital through something like a token offering, although the first wave were meritless, basically, or the implementation was very poor?
Yeah, I think at some point in maturity that there's some merit there. We're definitely not there today, but I think to potentially gain some efficiencies, to create a really great user experience for consumers, it is a very interesting way to actually go out and raise capital, and actually have a formation process from a company lifecycle standpoint. Now, today I think what's talked about a lot is more of the illiquid securities or assets that can be more freely tradable. I don't know if that's necessarily the case, right? That's the big pitch today. I kind of disagree a little bit that that's the case, but I think at some point of maturity, as we see more market infrastructure pick up, as we see the full life cycle of a company from inception all the way through to some either closing out of the company, M&A activity, whatever it may be, actually be able to raise capital, trade capital, move capital efficiently, there is merit to that, definitely.
It's interesting that even before blockchains existed, you were working on this problem of rendering private securities liquid, and that has been a huge motivation behind all this tokenization.
Yeah, and like I say, right place, right time, and a little bit of blind faith. It has been awesome, right? And I think it has given me really great experience to help my role that I'm in today.
Since you got started at Second Market, a lot's happened in the Bitcoin community, and there's definitely been a lot of scares. So just off the top of my head, Mt. Gox, SegWit2x, Craig Wright, various like Bitfinex hacks, Binance hacks, Mike Hearn rage quit. Was there ever a time where you lost faith in Bitcoin that you thought this might be going away?
Yeah, I mean, that's a tough question. It hasn't been the big cuts. There have definitely been time where you lose faith, and it actually is what helps drive me today and helps, I think, make me a pretty good product manager at Fidelity today. I think user experience for Bitcoin is tough. I think it's the death by 1,000 cuts every time I hear a friend that got his phone hacked and lost even $1,000, a couple $100, even $10 of Bitcoin. You kind of hear that story over and over again. You hear, somebody sent Bitcoin to the wrong address. It's those things that I haven't. Trust me, it's really moved along quickly, but it hasn't progressed to a level where I feel like your everyday user can actually use it yet, right? And those are a lot of the things that we're working to solve here. And at times, it's what's taking so long, what's taking this industry so long to be able to figure that out. But I think the human capital that's now flowing into the industry and the asset class, I think it's going to take something pretty monstrous to help destroy even a little bit of my optimism.
What do you see as the major structural barriers, maybe the buckets of barriers that are preventing more widespread adoption of Bitcoin?
Yeah, there's a couple there, right? So it has a history, right? 10 plus years of history, but a big portion of that history is overshadowed by negative news and media and attention. And I think a large number of households or folks here in the U.S. and even abroad don't actually know what to do, right? They don't know if it's an investment. Is it a current? You still hear today, is it a currency or is it a commodity, right? They're called cryptocurrencies. They're called digital assets, but the CFTC oversees them, so are they commodity? I think a lot of people still have big questions there. I think the user experience is one that I think people still struggle with, right? Until we see, somewhere where someone can access, if they're looking at this as investment alongside their other investment accounts, that will be really interesting to folks if they can, access it very easily through their mobile device and have a really good feeling of security. That's going to be really interesting, I think, to folks. If, again, going to classification, if people can classify this somehow, right, for themselves, I think that will get people to a place that's very comfortable.
Do you have an opinion on the best analogy for something like Bitcoin in terms of the existing asset classes?
I think there are a ton of them, right? For me personally, I'm still the digital gold stored value makes a lot of sense, right? Supply and demand. That to me, it resonates with me personally. It resonates with people that I speak with. But I think ultimately people are going to form their own opinion based on analogy that they have, right? It's still essentially an early stage. If I were to liken this to more a venture company, from where the technology is, it's still kind of early stage, even though it's 10 years in. I mean, look at Amazon when they were 10 years in. It's still a very interesting story, right? No one would have thought that Amazon would have been the world, this retail online bookstore would be the world's largest provider of cloud computing. So I think that story narrative will start to unfold itself as more applications get built using it.
Yeah, it's been interesting to see how so many of the big conflicts in Bitcoin have been a function of people having different visions of what it should be. With obviously the main one being the big block episode in 2017, which your former employer was obviously very involved in. Where there was just this fundamental view from many of the early Bitcoiners that it was fundamentally a payments technology. And I think many in that camp would see some sort of irony in terms of treating it as an asset to be stored and custodied, especially by a third party. Is this an objection that you deal with at all, given your mandate?
Yeah, so my mandate being here at Fidelity. Yeah. I mean, so Fidelity Digital Assets, right? We're providing access for institutional investors to be able to buy, store, trade, service, and we can service their digital assets. Think about the institutional market is they typically require a third party to do that.
So it would be out of the question for them to really engage with the asset directly in the first place.
What do you mean engage with?
As in, like, literally transact with it.
No, I mean, institutions use dollars, right? And they transact in dollars. And that has to be held somewhere. They're not holding dollars under their bed. They're using a bank to do that. And if that is the way that they see that technology working, then that's their right, and they can absolutely do that. Now, there are some practical limitations to doing that, right? Like, you can't go buy something, and do you wait for a confirmation? Do you not wait for a confirmation to actually make sure that's a good transaction? You're going to wait at the store for 10 minutes to make sure that happened, or, you're going to release securities to an institutional investor immediately if there's not a confirmation. So, I think that's what's really interesting about what's the application being built on top of Bitcoin, helping improve that UX.
So I want to dive into a little bit more about what Fidelity is doing. So for those of you who are not familiar in the audience, it would be great if you could just set the stage in terms of what the product offering is right now for Fidelity Digital Assets, and also maybe weave in why you decided to join. Once you heard this vision, what got you excited about it?
Yeah, so Fidelity Digital Assets, we are an institutional, for lack of a better term, brokerage platform for digital assets. So right now we have an institutional custody platform that allows institutional investors to hold their Bitcoin with us. And for us, that's safekeeping security, books and records, providing them access to their Bitcoin holdings. We also have a trade execution platform that really acts as more of an on-ramp, off-ramp for clients to be able to get access to Bitcoin or dispose of their holdings if they'd like. And it's been great so far, right? We announced the business October 15th of 2018. We said we'd be live in Q1. We met and exceeded that date. I believe it was December of 2018 when we had our first client onboarded. And have been slowly rolling that product out to more and more institutions as we scale the business. I'm lucky enough, as I was explaining earlier, kind of joined in Fidelity Center for Applied Technology, and so was kind of in on the ground floor to help set the vision, right, and helped us think about what the institutional market looks like. And at the time that we started building out the business, we kind of surveyed the landscape and saw that there was a big hole in the institutional servicing market for this. The industry very much started retail first, or consumer first. And it was really easy for consumers to access custody, to access trading applications, but it was really hard for institutions to do that. Not only from a pure sign up, right, where you're putting in your personal email and your personal name and then signing an institution to that, but even from basic reporting, capitalization, insurance, that wasn't really there at the time. And it was a bit of some inbound from broader Fidelity customers, knowing that we were doing some work in the space, showing some interest, and also us surveying clients as well, seeing if they're interested in it. And you guys were on the ground floor too, so feel free to add anything to that. But that really resonated with me, which was here today is an underserved market, not because they don't want to be, right, just because they physically didn't feel like they could enter the market if they wanted to.
Yeah. So, I think it's been fascinating to watch just how the company has really leaned into this technology and really been at the forefront of this. And when you started, you were actually tasked with figuring out how all the liquidity would work for this platform. And I think people would be shocked to hear just how immature that landscape was even a couple of years ago. And so maybe talk a little bit about what it means to procure liquidity and actually service that within the context of a large regulated financial institution. What does that job look like?
Yeah, deep breath there. At the time when we started, and you guys had a great podcast with Dan from Circle recently, who talked a lot about what liquidity looked like in the market even when he was starting servicing Circle's retail app. So I'll try not to rehash that too much. But there were only a handful of institutional-like traders or institutional firms that were trading Bitcoin. And a lot of it was being done over the phone, over Skype, over some messaging platforms. And for an institution like Fidelity, that's not the way that typically transactions happen. at times you can, of course, go over the chat on Bloomberg, but you're still dropping tickets and they're getting booked and they're into books and records. And, to the best of my knowledge, Skype doesn't have that capability or functionality to drop trade tickets into books and records. So what we kind of had to focus on, and at the same time, the typical trading counterparties, the big banks and trading firms weren't really touching Bitcoin yet, and for the most part still have yet to. So we've had to go and look at a number of these companies and actually apply a very rigorous counterparty review process on them that isn't too different than the process that we look at normal trading parties here at Fidelity. And so, that really slimmed down the list of potential counterparties. And then we also looked about, connectivity, going back to market structure. Not many firms actually had electronic trading capabilities, which is what we're very much used to, right? And so you either connect over API, a lot of it was over the internet via REST APIs, and not as much the fix or cross connects that we're typically used to in terms of institutional trading. So we've seen absolutely a very much large evolution of that more recently as the market structure has started to pick up, and we started to see an evolution actually sway more towards the traditional trading of these assets. But yeah, back then it was tough. There's only a handful of firms that we would feel comfortable doing business with. Luckily enough, I had a couple of good relationships that we helped get across the finish line.
So within that context, maybe staying on the topic of liquidity, the other thing that's really happened throughout the course of the life of Bitcoin is just that a lot of the volume has historically been on offshore exchanges, at least for the spot markets. A lot of the volume's been on offshore exchanges that are unregulated. Gox obviously was a large liquidity pool to start with. Right now, Binance is enormous. How do you think about these venues? Are these venues that could be accessible by a large traditional financial services firm, or is it a bifurcated market right now?
Yeah, I mean, you said a key word in there, which is just unregulated. As we look at potential trading counterparties, one of the first things we do is just look at their regulatory capabilities, right? So we're going to look at their operational capabilities, their regulatory, what their licensure looks like from a regulatory standpoint, and kind of what their overall operational technical implementation would look like. So to your question directly, if they're unregulated, we likely wouldn't access them, or not likely, we wouldn't access an unregulated venue that we felt needed to be regulated. We're just not going to do it. But to your point, there are large pools of liquidity right now for folks to access, and that doesn't mean they're inaccessible. We would look to our counterparties to make sure they're only trading on regulated venues, but I think they're going to continue to be around. It's absolutely bifurcated today, but it does provide opportunity for someone that wants to be able to play both sides to do that.
It's kind of an interesting asset class because you with equities, you would never have a situation arise where IBM is traded on some unregulated venue in the Seychelles. But for gold, I suppose you do, right? You'd have these black market transactions happening all the time,
and like Forex, right?
Yeah.
Those markets are global, 24/7.
Yeah, I mean, it's not even securities. Obviously, they're a little bit different because they need to be traded in a certain manner. But what I'd almost call a dark pool ATS versus a fully lit exchange. It's not too different there, right? You have certain players that go to one, certain players that go to another, and so bifurcated markets aren't new, and wherever we decide that as a business we're going to tap into, that's where we're going to tap into.
One of the things where it becomes potentially a problem is around investment products, and so we've seen ETF denials for the Winklevoss ETF proposal, as well as for Bitwise, that really call out the fact that on the spot markets, a great number of these venues are not surveilled, and they don't have agreements between themselves, and also just the volume is on these unregulated exchanges. And so do you see this being a permanently gating factor for asset management product in this category?
permanently gating is tough, right? Because we just listed 4 or 5 other assets that are similar and that there are investment products wrapped around them. I think until there's more clarity and understanding of the data that's being pumped out of them, right? We've seen reports that 95% of the volume is fake, 99% of the volume is fake, 40% of the volume is fake. And I think, kind of that disparity is what's also just causing a lot of confusion. And so, being able to actually prove that through really great data analysis and cleansing, and there's a bunch of great companies out there that's doing that. One comes immediately to mind, Coinmetrics. I think that's what's going to help solve that, right? Is actually providing clear, articulated data to ultimately folks that want to prove it. And look, if I'm an investor, if I'm a regular person and I see all these disparate headlines, I'm probably not going to invest anyway. Right. And so I think that's going to be the struggle as well.
The one proposal that lots of people have made on that axis is looking to the ground truth of the assets which are held on deposit in some of these institutions, so that you could compare that to the claimed trading volume and see if the relationship makes sense or not. For instance, in the case of Quadriga, if they had been imposing some sort of transparency policy like this, then you might have been able to detect the issues there before it was insolvent. So, is this something that you've contemplated at all? Any of these notions of proof of reserve?
Totally. Yeah. I mean, proof of reserve to us is super important, but I don't know if that solves necessarily the trading problem, right? Because what's your turnover multiple going to be on all of the assets that are traded? What is turned over at Fidelity may be a lot less than what's turned over on Coinbase Pro, versus BitMEX, right?
But you could use it to spot extreme outliers, for instance. Like exchanges that are claiming very high volumes and you have virtually nothing in reserve, for instance.
Yes, if you have virtually nothing in reserve. Yes, extreme outliers, sure. But does that absolutely solve the problem? I'm not sure.
Yeah, I mean, I think what might be interesting is if exchanges actually become engaged in creating a public-facing audit or attestation as to their assets, because that's one of the interesting things about the asset class is that you can prove ownership of some coins to a third party. Although so far, most of the main exchanges have been reticent to do that. All of them, really.
Yeah, it's a competitive advantage, right? That they want to...
Secrecy? Mm-hmm. Yeah, for now.
Totally for now, right? And as, again, market structure is still basically in its infancy. And I'm not sure that Exchange A would want to share information with Exchange B that could be seen as competitive.
So let's dig into some of that market structure and something that we almost feel like a broken record talking about when we think about the market is we often say qualified custody, regulated spot markets, or surveillance sharing agreements. These are some key enablers. This is going to make the whole pie grow. This is going to allow institutions that previously could not access the market to actually get in. But what is qualified custody? I mean, why don't you just break this down for us? And what does it mean to be an institutional custodian? We hear a lot of companies claim that they're institutional. What does it actually mean to be institutional?
Yeah, so to me, that's a two-part question. So you have the one question of what is a qualified custodian. A qualified custodian is a term that's part of the Advisors Act, which is subjected to all registered investment advisors, and it just says if they're holding funds or securities, it describes where those funds or securities need to be held. And it's been really interesting, that this has become such a hot topic, and everyone's lining institutional investors to this qualified custody role, because it's only is a portion of the institutional market, and so I hope that clears up what qualified custody is. Right, it's a very clear-cut role as part of the Advisors Act, and is really only focused on those entities or advisors that are registered investment advisors. That's not to say that there are other such roles for things like broker-dealers. I've heard you say on your podcast many times, good control location or 15C3-3, which is what broker-dealers need to look at, right? So there's a number of these issues, as lawyers like to call them, that are very much legal in nature, right? And so it's very much a legal term. And so, that's one aspect of the question. I think your other question around what is institutional custody is really interesting, right? So in traditional markets, I saw it very simply explained recently or in an article, which is, in traditional markets, custody is books and records keeping, right? That's all it is. It's debits and credits and keeping track of customers' assets. And it's everything that sits on top of that books and records that makes a really great user experience. So, if you're an institution, it's a easy onboarding as an institution that may have accounts and sub-accounts and may have certain employees that can access one of those accounts but not a sub-account. And so it looks like entitlement. It's providing reporting out to customers on a periodic or certain ad hoc basis. It's how do you integrate some of that data upstream with some of their other consolidated data reporting feeds. And ultimately it just comes down to what does safety and security look like? How do we think about risk management? How do firms think about insurance against their assets as an ultimate backstop? And so when you wrap all of those things together, to me, that is what institutional custody is. And a firm like Fidelity, we're fortunate enough to have a lot of those aspects, right? And so, as we're super innovative, right? And we're always thinking about new technologies and new ways to offer products and services. But at the core of it, we're going to safeguard assets, right? Because in the digital asset world, that's number one. You have to safeguard your assets. Then you're going to have books and records sit on top of that, and then a portal and a dashboard and a view into all of that when reporting, and also tie some of the risk management into there. So we had a Big Four provides a SOC 1 Type 1. We believe we're probably the first digital asset custodian to receive that from a Big Four. And so that really speaks to our risk management and control structure.
I didn't realize that. That's great. So that is definitely the first time I've heard that there's been a Big Four firm opine on that issue.
The messaging I've always heard from the Big Four is that they don't want to get involved in crypto assets or digital assets.
Yeah, I've that's interesting, right? Because I'd argue that they do, and that we've even seen, I think it's EY actually put out, I'm going to butcher this, Nightfall maybe, which is an ERC standard on that, right? So they're one of the Big Four. We've seen, I believe KPMG has a blockchain digital asset practice now, and a lead there, and the other two being PwC and Deloitte all have practices that are looking at this. And so, going back to your proof of reserves, I think a lot of them, there was actually a conference recently where a lot of the Big Four were at, and there was, a talk on zero knowledge proofs and how, audit firms should be thinking about proof of reserves and running those to actually check balances.
Yeah, there's a paper on called Provisions, which uses ZKP for a proof of reserve. Mm-hmm. So that's actually quite encouraging to hear. That's good.
Yeah, audit is back, we like to say.
So let's talk a little bit about the roadmap. So Fidelity's launched Bitcoin custody, has launched trade execution, both really great products. Where's it going from here?
Yeah, our tagline here, or mission statement is, we want to be a full service brokerage platform for digital assets. And so we want to provide, a seamless platform for institutional investors to be able to access and have their digital assets treated very much like other assets that they hold. And so that, we can grow vertically by having new products and services. And, there's a very natural extension that moves up from there, upstream. And so those are all things that we're looking at doing. For us, innovation is awesome, right? We're going to be super innovative, but also safety and security is going to be key for us. So I think where we're going to focus the most from a roadmap perspective is probably more horizontal. How do we expand geographically into new markets, right? Right now we're just here in the US. How do we actually enable ourselves to service other types, or a full spectrum of institutions, right? I think what we've seen so far very much, a lot of your family offices, crypto hedge funds, and some traditional hedge funds mixed in with some of your more traditional institutional investors, pensions, endowments, and others. But it's really how do we focus on bringing those institutions into market that aren't in market yet. And that's really where we're spending a lot of time focusing. And from a product standpoint, what are the features and services that they need, and going out and working with them directly to actually bring that back in-house is where, as we think about roadmap, what's most important to us.
One thing that's interesting is that the crypto market has been somewhat fixated on Fidelity as maybe the first mover among firms of its size in terms of being so aggressive about digital assets. What has it been like internally observing the kind of rabble of the crypto market looking to Fidelity so expectantly in terms of building products to service this asset class? Has it been like a surreal experience to have your work be so public in terms of the way that's interpreted?
Yeah, it has been surreal, and you get lost in the moment a lot, right? And so, for me, coming from what I'd call a startup and transitioning into Fidelity Digital Assets, we very much operated like a startup. And so, for me, it didn't feel like I was within, the Fidelity actually building this and working on this. To me, it just seemed like work, right, and doing things. And then when you do go out and you read articles or you go to a conference, it is a little bit surreal to see that. And when you see institutions enter their information in your contact us form, saying like, wow, like that's a name that literally just came through our contact us form is super interesting as well. And so surreal is a good word. And it has been interesting, but at the same time, the spotlight's on, right? And it's really on us to make sure that we're building the right products and services for the customers that need this.
So I know in 2017, one of the most common requests made by just, I guess, retail investors was, would you, Fidelity, help us deal with our digital assets? Has the level of uptake in terms of that more narrow set of clients that you're targeting now, has that met your expectations?
Yes, from the institutional side,
yeah,
it absolutely has met our expectations. We set a goal for ourselves, and we're on target to meet that goal, and so we feel really great about where we are as a business in kind of providing products and services to where we had focused and where we thought there was a need in the institutional marketplace.
And so when you launched, a lot of the messaging was about Bitcoin. Naturally, is the kind of the preeminent digital asset, whatever you want to call it. Can you talk a little bit about your methodology for evaluating these assets and why Bitcoin was the first choice for you, and why there hasn't been anything else since?
That was to satisfy the XRP army, right? That question.
So the initial focus on Bitcoin was just a function of the work that we'd put into it, right? It's been around the longest. And Fidelity's story dates back to 2013, 2014, when they started doing a lot of work on Bitcoin, right? It had been out in the wild, for lack of a better term, for some time. We could mine it. The market cap was by far the biggest. And we were able, there was some semblance of market structure there, right? And I know it was talked about a bunch, that we launched a mining effort in 2014. Fidelity launched the ability for customers to pay for coffee and sandwiches in the cafeteria in Bitcoin. And so a lot of that infrastructure was there for us to do a lot of proof of concepts on it. That's not to say that nothing was done on other assets, but those were the ones that really stuck. And so, our evaluation methodology for other digital assets is really focused on one, customer demand, right? So we're very much filling this institutional segment or providing services to this institutional segment of the marketplace. And what we hear the most from them is Bitcoin. And it could be that's where they've done the most work. It could be that's where they see the most infrastructure out there for them to be able to trade, store, and hold that. Number two, what we do is we do a full technical analysis and deep dive on each blockchain and the native assets. And it's not only, what's their consensus mechanism and, what does that look like? It is also understanding who are the developers on the project, how much developer growth has there been? Has there been any contraction of developer growth for any reason? What are all the applications that are being built in and around it, and kind of helping us tease out what the use case would be for investors and why they may be interested in it. And we feel like that passes enough, muster. We'll then look at a legal regulatory compliance lens and view on that, and look to provide that. And then we'll do a lot of security work as well, and understanding what are the cybersecurity implications to offering a product like that. And so for us, we did publicly announce Bitcoin and Ether when we launched. We right now just have support for Bitcoin and are continuing to work on making Ether available for our clients.
One of the things that has been continually fascinating to me over the years, and obviously I was here for a good part of this, is you think about this asset class and the creation of Bitcoin and digital assets, and you look at other financial institutions and how they're trading this technology. So for the longest time, we've just seen custody banks just stare at this and just don't care. Or they're doing private blockchains and they're trying to re-platform their back office. Meanwhile, you have this technology that's the emergence of a new asset class that people are just demanding to hold. And by the way, the people that are asking for it largely are the people that you would want for, next generation of customers. These are the people that are young and savvy and, by and large, in positions to eventually have, wealth to be able to put onto some of these platforms. So it's really been fascinating to me to see the inactivity of a lot of Fidelity's competitors. But at the same time, I think I have to kind of pull myself back to there's some like really dark days, right? Like there's, 2014, 15, prices crashing. No one cares about this. But I think my view is that there's going to be like case studies written about the Fidelity Digital Assets and the persistence here. So what has it been about Fidelity that has allowed the firm to continue to innovate while its competitors are just largely sitting on the sidelines for now?
Yeah, it's got to be Fidelity's commitment to innovation. When I first joined, they had said that Fidelity was a technology company at heart that just happens to do financial services, and I thought it was the funniest thing in the world, right? Like, here you have all of these regional centers and sites in every city. This is not what a technology company looks like, right? Now, coming from a seat where I was helping venture-backed technology companies actually, facilitate some transactions in their stock, so I had a good feel for what, in my mind, a technology company really was. And, I get to walk into, Fidelity Center for Applied Technology here on my first day and take a tour, and you actually see a commitment to innovation, which for me has been, eye-opening. And the firm is, the fact they even have a Fidelity Center for Applied Technology, which is separate than Fidelity Labs, right, which is another place where teams and businesses are looking after innovative products and services to offer into the businesses has been really awesome. And so the firm has a very strong commitment to looking at new transformative technologies that could impact how the business operates in 5, 10, 15 years, and actually starting to get a really good understanding of that. And so for us, that has been really the catalyst that helped drive the business here, and being able to have a team that's focused on continued innovation, not only in digital assets and blockchain, but all these other new technologies, is only going to make not only our product better, but the rest of Fidelity better. And I think it's that level of commitment which provides or affords Fidelity the ability to have a business like this.
Do you think that the competitive set of existing custodians and existing brokerages that are not in the crypto space yet, are these folks waking up to this opportunity and starting to mobilize? How do you see that? Is that maturing at all?
Yeah, I have a middle row seat to some of that, right? By just going to conferences and hearing some of them speak. Yeah, I think that they're viewing it and they're watching it, and they're working on what products and services they might be able to build around it. So absolutely, I think that they're awake and that they're trying to see where they may be able to fit in for their business to actually operate in the ecosystem.
What do you make of the messaging by many of these kind of crypto startups or crypto firms that have been around for a while, pitching themselves as institutional, which is something we hear a lot? Do you think that is, credible, or is it just kind of a PR strategy for them?
Look, it's got to be credible, right? They're not just I'd hope they're not just putting institutional at the back half of their name and just hoping that things come in. There's a segment of the market, as I was mentioning, that I felt that when we looked at this landscape a couple of years ago, was underserved, and everyone's trying to kind of fill that void. And so, great companies have been founded as startups that have met institutional investor needs. And I think we're going to continue to see that.
Fidelity is a large asset manager. We mentioned earlier there have been various ETF proposals over the years for Bitcoin products. The window is clearly not open for that right now, but just there are products out there. I mean, Bitcoin Investment Trust, you help build that. That is a listed product that you can buy on fidelity.com. You can buy it on an existing brokerage platform. So for those who might not be as deep in the weeds on how these products actually work, what is actually possible right now from an investment perspective in terms of creating products that hold Bitcoin and other crypto assets, and what's not possible?
Yeah, I'd say broadly speaking, with a few exceptions, which I'll touch on, are mainly private vehicles, right? And here in the U.S., what a private vehicle looks like is a limited partnership, LLC, some type of special purpose vehicle that is set up for the sole purpose of holding an asset. And that could be Bitcoin, it could be a basket of digital currencies. And I think that's what we're seeing a lot of today. We saw, you mentioned Grayscale's Bitcoin Investment Trust. That largely is a private vehicle that has shares that trade publicly through a seasoning process. You have, what was the announcement this week was Wisdom Tree on 6 having some type of offering. And, I think we've seen a couple of other types of companies looking to offer their shares on other venues. But at least here in the U.S., it's very much private vehicles, right? And that runs the gamut from, as I said, like a limited partnership, which provides certain benefits to an LLC or an SPV. And before Nick asks the question of like, well, why would you want that instead of just holding, the underlying directly or the spot market directly? I think there is a thesis, and one that is validated through the success of Grayscale and others, that holding a security, holding something known, resonates with folks. And having a more managed like account resonates with a number of folks, right? They know what a Reg D offering is. They know how to review a PPM, and that resonates with folks.
And so are you optimistic about the potential to eventually have ETFs and mutual funds and a more retail-oriented and accessible line of products here? Is it just a matter of building some of this infrastructure?
Absolutely. Yeah. I mean, I think it's going to take time, and thankfully that clock's already started, right? Some would argue that it's 6 years in on the clock. That's been ticking, and absolutely, I wouldn't be surprised if we saw an investable product that's publicly traded that provides access to investors around digital assets.
Do you think many people in the industry would say that there's this kind of existential conflict between the kind of cypherpunk origins of something like Bitcoin and then the business that would financialize the asset in terms of, well, if Bitcoin ends up, a large fraction of supply ends up captured within the walled gardens of institutional finance, where there's lots of surveillance and KYC and compliance attached to the circulation of the asset, then that sort of defeats the purpose, of the asset in the first place, which is that it's meant to circulate freely and without encumbrance and so on. Do you see this as a tension, or in your mind, are you just satisfying a certain demand to hold the asset and you have to do it in a certain way?
Yeah, I'd say it's more the latter, right? That we see a certain demand to hold an asset. It has characteristics that people find appealing from an investment standpoint, and that will provide that to them. And there are rules and regulations that need to be complied with, and you'll have to comply with those rules and regulations. I hate to say, but regardless of the ethos of that, right? Of where that came from, and for us, it is, or for me personally, it's something very interesting and near and dear. to me, which is, I think my initial kind of interest in Bitcoin was that ethos, right, of being able to hold an asset on your own, right, that you could feel comfortable doing, free and clear of any other intermediary, and in a way that resonated with me as someone that enjoyed technology and was a technologist, and not having to worry about suitcases of cash under my bed. Although it could have been a very small duffel bag at my age when I learned about Bitcoin. I think when I think about this, right, is we are absolutely just satisfying demand, and that there are plenty of things that the community will do if they're needed, and if Fidelity may support that, we'll see.
Is there a critical threshold of supply that if it ends up within these custodial institutions, you consider the Bitcoin project to have lost its way, for instance? Like if 80% of Bitcoin ends up held with various custodians, is that a threat to Bitcoin?
It's a threat to what Bitcoin was in 2008. It's a complete win for a brand new technology and infrastructure that is kind of remaking how rails, for lack of a better term, work across industry.
Have you guys given any thought to potential protocol level changes that would impair your ability to operate? So, for instance, the addition of confidential transactions to Bitcoin. Would that be something which would be a hindrance to the way that your products are operationalized?
It would, if it wouldn't allow us to do or wouldn't allow us to run our business the way that we're set out to run our business, which is following certain rules and regulations, then it would absolutely impair the way that we do that, right? And I think, I guess my hope would be for things like that, there's some level of optionality that's included that would allow folks to be able to operate businesses, but also allow folks to be able to use the same rails for transactions that they'd prefer.
So Nick brings up kind of an interesting example of something that I wonder a lot about, we talk a lot about, which is just this idea of building a company on a nascent protocol, building a company that operates using a nascent protocol. And if you've looked at the history of Bitcoin, as I know you have, there've been a lot of companies that were kind of started with this idea that Bitcoin was a certain thing, and it ends up that they were building with the wrong assumptions. And so the payment processors really come to mind in 2012 and 13 of, hey, Bitcoin's going to be a credit card replacement. Well, turns out on the base layer, you're definitely not going to be able to do that. And so those folks ended up having their business really compromised. So how do you stay close to the protocol and make sure that you're not making similar mistakes?
Yeah, so I'd say the way that from an architecture standpoint, we have to understand that fundamentally the blockchain underlying protocol could go even the businesses and ideas and use cases are wide, right? And it could go any which way. And so, me personally, how do we stay close to make sure that we're not building businesses and we're being very adaptive? It's tough, right? Just like everyone else, you have to kind of live, breathe, sleep, this asset class, and whether that's reading. I listen to one podcast on the space. There are meetups. You guys host one, we host. We co-host one here in Boston. Kind of staying close to events and having a network of very trusted people that you can talk to about the industry. I'd also say having Fidelity Center for Applied Technologies and a number of academic partnerships really does help us as well in understanding what's going on in academia, where a lot of this work is being tested and thought about and to a degree implemented, and taking some of those learnings back to our business has been super helpful. And so we kind of have to have a foot, or folks like me and folks on my team need to have a foot on what's being built around us, but also what's being built within us here at Fidelity, so we can make sure that we're not being left behind.
And you guys have done a great job of sponsoring core development and being a very active part of the DCI, amongst other things. So that's got to help as well.
Absolutely. And those are some of the partnerships, that we've talked to, and some of the investments that the firm has made and our level of commitment to the asset class. There's a number of academic partnerships. There's a number of professional organizations, industry groups that, we are a part of to help get a lot of our messaging and help understand where we need to go from a product perspective.
All right. So Terrence, you've been super generous with your time. Our closing question is, what are you the most excited about over the next year in the crypto asset space?
Yeah, so over the next year, I'm very excited about the amount of capital flowing into the space. And so not only, the institutional capital and actual capital, but a lot of the human capital that's going into the space. And I think what we're starting to see now are, people that are entering the space on a full-time basis and applying their real world, I shouldn't say real world, but a lot of their experience in traditional markets and asset classes and technologies and applying them here. But we're also starting to see, some of the offspring of academia actually come out, right? And so we're starting to see, universities offer classes about blockchain technology, about digital assets, and we're starting to see a number of those folks actually start to flow into this asset class and start businesses, join companies, and really help promote what is needed in the space, right? And really help us pick up where, or really help us build out the UX that is much needed to help drive this more mainstream. And so that's got to be what I'm most excited about, is just the continued increase in folks entering the asset class on a daily basis.
I couldn't agree more. I mean, if you had told me back in 2014 that we'd have some of the caliber of people streaming out of technology firms and financial services firms and actually building companies in the space and joining companies like Fidelity, the talent is just crazy. So I think, you usually can't go wrong following the talent. So I couldn't agree more with what you're saying. So where can people learn more about FDAS? If you're an institution looking to get in the space or park some assets, park some Bitcoin somewhere, buy some Bitcoin, where can they learn more about Fidelity Digital Assets?
Yeah, so our website, fidelitydigitalassets.com. We're on Twitter at Digital Assets. And you can find me on LinkedIn, Twitter, Telegram. Just look me up.
Awesome. All right, Terrence, this has been fun. Thanks so much for joining.
Thank you.